All right, I am Will Curtis, your host of the Vets in Real Estate podcast. Welcome back to another episode where we take another veteran, talk about their transition and what life is like on the other side of service. This week, I'm joined by David. David, thank you so much for joining us.
Hey, Will, thanks for having me.
Yeah, so tell us, what did you do in the service?
I originally enlisted as a 35 Papa, which is 35 series is military intelligence, and I guess the actual title, I think it's still called the Cryptologic Linguist. So basically it's signals intelligence, and then I got to go to the language school for a year to learn a language for my job, which was pretty cool. That was definitely an interesting experience. It's kind of like high school all over again. It was like 7 periods a day. Different teacher would walk into the class, different curriculum, vocab, grammar, and all that. So it was a whole year of that up in Monterey, California.
First place to be stationed?
Yeah, right. Great weather. Except that the smell took a while to get used to because there's a big fisherman's wharf right there in the Monterey Bay. So you go outside and it's very, very fragrant smelling down there sometimes.
Yeah.
Then did the tech school in Goodfellow Air Force Base in San Angelo, Texas, and then pretty much spent the rest of my career at Fort Bragg.
I would say there's better place to be stationed, but yeah, I mean, there are better places to be
Very
stationed.
few.
I mean, I don't know. Some people love Fayetteville. I don't know, but I don't know.
It's kind of like everywhere else. I think it's kind of what you make of it. I know some people that went up to Drum, absolutely loved it. They're outdoorsy. They're fine with kind of just being kept to themselves. And there's some people, it's just like, man, there was nothing to do. So it's just kind of like really based on what you're into is kind of where, I think most people will judge on if it's a good duty station or not.
That's fair enough. I could see that. So you're a foreign linguist, more or less, doing kind of signals intelligent. That has nothing to do with real estate. How in the world did you go from, military career into real estate?
So, I mean, there's a lot of overlap as far as like the analytical stuff, patterns of life, kind of looking at common trends and how overall trends affect what you're trying to do. So there's a little bit overlap, but yeah, a lot of people in my line of work when I was in the military usually get out and just swap their uniform for a shirt and tie and go work for an agency. But my grandmother was really involved in real estate. She lived in Columbus, Ohio, and I was always interested in it. Always kind of caught my eye, and then I had got injured I was in a training school and I blew my knee out, and kind of during recovery it was one of those, it's like you can either take a no run, no ruck, no airborne profile and go sit at a desk, or you can try to, med board and see where that lands you. I was like, man, I really don't want to go sit in NSA for, however long those shifts are. And just, so I took my chances at the med board. So between my recovery and stuff, I had like over a year, between the surgery, because I tore my 2 ligaments in my knee and had them have them both fixed and stuff. So the recovery was just over a year. So I kind of fell into how most people do, stumble into the Bigger Pockets podcast, which kind of, it's like, oh, cool, flips. Oh, cool, duplexes. Oh, cool, 4 units. Oh, cool. And then it's just, I kind of gradually elevated my interest in the, kind of like how basically the natural progression of when people get self-introduce themselves into real estate. And so just kind of kept listening to it. But at that point, I think I still kind of considered it as like a potential interest, saw it, slash something to do on the side. So when I eventually got out, I tried my hand at financial planning. It was okay. It just wasn't the right fit for me. And so I was like, no, I'm going to do this real estate thing full bore. And I saw my GI Bill, so I applied to Georgetown. They have a online slash hybrid master's in real estate that I applied and got accepted to. I did that, graduated in December 23, and kind of just really jumped right into multifamily, because that's just kind of, with all the research and where I live, to me it made the most sense as far as kind of which one to start my journey, kind of really diving headfirst into.
And you mentioned college and doing a program. We get that question often, and I did my undergrad real estate finance, and my whole goal was to be the smartest house flipper. And I was going to go back in and commission, and then live like a, live like an enlisted guy, but make an officer pay. That was the plan.
Yeah.
But so you've got a master's in real estate. How did that? Has that helped? Is that worthwhile? I mean, what we hear that discussion all the time.
So one, the caveat is I had my GI Bill. So if someone's looking to do it and having to front like all the education costs themselves or apply for student loans, I would not say it's the optimum route to go. Because at the time I was still kind of interested in, maybe I could do this for like a developer. I really like the valuation portion. I'm with the military, everything's based on systems, so it's like that's how I always kind of look at things. And so it kind of just I was seeing if maybe it helped me get into somewhere to get experience. But I noticed most of my peers who were in the program were already involved in commercial real estate in multiple forms. We had some attorneys, some PE guys, some brokers like yourself that are, a lot of them were looking to eventually spin off and do their own brokerage from where they were being employed. So a lot of them were already in commercial real estate at a pretty high level. And this is more of like kind of, I guess, padding on the resume for them for like internally is what a lot of it looked like. But if you're trying to use it to like hard pivot into real estate, like say coming out of the service, I don't think it's the best program for that. Just as far as, unless you live in that area and because most of their networking and the teachers and everything are like really hyper local to DC. So maybe if you're looking to move in that area and do real estate there, because they did really focused hard on development and like subsidies, like light tech and all of that. They hit that pretty heavy in the program, so I think they like to funnel people into those types of roles. So if you're looking to do that, I think it'd definitely be worth something looking into. But I think finding like a mentor, mastermind, someone who's doing what you want to do, and can like kind of show you the ropes in the industry, it'd probably be a far better experience.
And I would agree from the programs I went to, and then I'm a professor in a real estate program now. And I would kind of agree that I think that each program kind of has certain groups that hire from them. And if that's where you want to go, you want to get into that side of the business, by all means, that's where you should be looking at a school rather than, and the GI Bill's paying for it. That was how I did mine too, right? Was let the GI Bill pay for it. But yeah, I can see that if you really are want to go in a certain area, each school's got a little bit of specialty, and certain programs or companies hire out of those programs as well.
Exactly. And for me, I did like the kind of classroom, curriculum that, because a lot of this stuff is, even if you have a mentor who's really involved, they teach you the way they do it, not necessarily kind of like the standard or what's common practice. You don't get the case studies of, failed things. Like we did a lot of those. So like, even if you do find yourself wanting that, even with a mentor, I think there are programs, I think Cornell, I know University of Cincinnati near me, they have like certificate programs where they're a lot cheaper. You don't have to take all the other courses. You can literally kind of like cherry pick like 4 or 5 courses, and then that's all you do. So if that's something, I think people like, I like that, especially when I'm learning something new, the book, the curriculum, stuff that I can go back and reference. I think that's probably a more optimum route if you like that structure.
I can see that. So, what does a day in the life look like for you now? You've obviously gone through the university.
Yep.
Now
So
what?
I probably focus on under 100 units, and I'm really picky on my market. Like I like Dayton and Cincinnati. I live in Dayton. Cincinnati's about 40 minutes south of me. I just think Ohio in general has a lot of good things going for it. Um, and it's one of the best standards of, or not standards, but cost of living in the country. And I really like the syndication structure. It's a way to, you can focus on project by project. I know some people like to do funds. Everyone kind of has their avenue they like to take on real estate. Like, there's 1,000 ways to get involved in real estate and 1,000 ways to get involved in those other 1,000 ways. So it's just kind of, I like that model. It allows me to pick and choose which properties I think are going to work. There's no rush to invest capital like a fund where because if it's just sitting there, it's not generating a return. Um, but, I'm still, I've been at it for 2 years and I still consider myself, really green behind the ears. I haven't landed my first deal yet, not for a lack of trying. It's just um, sometimes, I've had a couple that the offer that beat mine out was a sight unseen. It's like, well, that's like, I cannot compete with a sight unseen. That's not kind of how I do my risk analysis. It's like, well, that's just kind of a loss. Nothing I could really have done better on my side. Just kind of a lot of lessons learned, still taking my bumps, but the key is just to keep looking at properties, keep networking. So that's basically kind of what I do in the mornings. As usually when I do kind of my networking. I've been really bad on the LinkedIn recently, but trying to get back into that. And it's just I do a lot of network calls, have a mastermind that we meet up with, and just staying active. It's one of those things you can't rush it, especially when you want to do it well. Um, all the horror stories I heard are from people just trying to rush something to get it done because they want to get it on the books, and then everything goes belly up.
So you'd mentioned, doing the syndication and it's taking you 2 years. That's got to be tough to have the perseverance to stick around and keep at something, trying to get that deal to land after a few years. How do you make it through that?
I just, I'm confident that when I nail it, when I get one under contract, it's going to meet, I may be to the point of conservative to the, maybe a little bit to my own detriment, but, all the lessons learned from people I've, talked to is, they went in thinking it would just be okay. And so I think, as long as I stay disciplined on my numbers, one of these days something's going to happen. I'm going to talk to the right person, check LoopNet at the right, on the right day or something like that. And it's one of those, where my family's in a position where it's not necessary to me to constantly have to force like a commission or to chase fees or something like that. So I try to be as deliberate as I can with my underwriting and with the projects I look at, just because when I try to go raise capital with the people who, have shown interest in, trying to meet new people, I want to be confident in what I can bring an offer versus to like, hey, I found this. This looks pretty, it's really shiny. And I ran it through, AI, and it said it'll be a great deal. That kind of, and that's not really what I want to bring. And if someone brought that to me, I would probably react the exact same way you just did.
And I'll say, from being on the broker side and having the syndicators come to us, sometimes we see that on our side. And, when we just choose not to engage because we don't feel it's qualified. Oh, it's going to be amazing. You realize it's a super fun site. You can't build multifamily. We'll figure it out. No, that doesn't work. Like, you start running into those things there. So I think you're on to something as well. One of my favorite guys I know that syndicate, if he were to ask me for 50 grand a day, I wouldn't even do the due diligence. I'd hand him the 50 grand, is because he has been adamant about what he's done. Everything he's done has hit, with the exception of one. And the one that didn't hit, he tells you exactly where I screwed up. Here's what I did. I got a little too aggressive on this one. And he's an open book on it. And I think there's something to be said that he lost one. And I said lost. He made a bit of money, but he didn't make nearly what he had promised. But he got too far ahead of himself. He thought that the next phase of development was going to happen in a certain area, and it didn't. The city stopped growing that way, and he took a gamble. That's what investing is. It's a bit of a gamble. But I think you're onto something by having a conservative mindset. And again, when it comes to doing it with him, I would give him money any day of the week because I know he's done his numbers. I know he's been conservative on what he does, and he's done 15 of them, and one didn't make nearly the amount of money that they wanted.
Especially when it's a metric that's really out of your hands. Like if the city's demographics starts changing or something happens like you can't control, that's different than saying like I didn't bring in enough working capital to start the deal. I thought vacancy would be easier, with a $1,000 marketing plan that I could be able to add, take on this 60% occupancy building, things that like that where it's like you can really just screw the pooch if you don't take it serious. And also, having one that didn't go so well, I think that adds a little bit of credibility to someone's story, because if someone comes in, says they're batting 1,000 every time, you're like, like really?
Yeah.
Like 1,000? Like no issues ever? Like it's just kind of, my spidey senses start going off when someone says there's never been an issue or never had something go wrong.
Well, so and that's one of the things that I actually sit down as a broker when I'm looking to bring on, syndicated funds or investment funds or whatever the case happens to be. I ask that GP, tell me about your funds, tell me about the one that sucked, tell me about the worst transaction you had. And when they come in, they're like, well, yeah, they're all been great. All right, either you haven't done enough
Right.
or you're full of it. And I agree. I think there's something to be said that having one, and again, and this guy's, they made money, but it was just more than break even. Like he was sweating for a while, and me knowing him, I saw the concern in his eyes. He's like, people trust me with money. I'm not providing what I thought, even though I think for him, there's supposed to be a bond that was supposed to be approved. It thought it was looking really popular. They were going to improve sewer and water infrastructure into the area that they were going into. Ultimately, the bond didn't got something else tied into it. It got voted down. He had to come out of pocket to build in the infrastructure to get to the site that they were going to build on.
I
It,
mean, yeah,
yeah,
and even then, there's like silver linings because okay, something bad happened that you had no control over. Was he diligent in getting in contacting his investors? Is he keeping everybody in the
right.
loop? Is he transparent on what's going on? Like those are the wins that like really can muffle that that hard pill. Because I think most people who've been around long enough are fairly rational when it comes to things like that. They don't. No one's going to be happy, but it's like, oh man, yeah, this happens. All right, cool. You told me we can work on this. What's the plan of action? What's the worst case scenario? Where are we trending? Can we pull out? What are the mitigations that were in place? Was this identifiable before? Was this in the little pamphlet you gave me saying, hey, these things we have recognized that may happen? Like, was this something, or was this like out of left field? So it's like you have those other things that you can kind of cover. Um, Even though this may happen, it can take the sting out.
Sure. So, and not to speak ill, because we know a lot of folks will get into the syndication side of the world, but it kind of has a bit of a quick get rich quick kind of slimy persona on some of that as well. I mean,
Yeah,
I've seen too many people that teach the class at the Holiday Inn Express and they're out of the business in 2 years. How do
right.
you, knowing that's part of the industry or knowing that's kind of what the reputation is, how do you stay above that, or what do you do to kind of position yourself as not another one of those folks?
Well, one is like I have no intention to ever try to push a course or something like that. That kind of funnel. Whereas I don't necessarily believe it 100%, but those one of those like those who can do, those who can't do teach. I don't necessarily think that's true because I think teachers are very important in our society. But
Sure.
it's kind of one of those like, why aren't you doing it if you're saying it's so easy and all this? And I know it's not easy. I've been doing it for 2 years and I haven't had one go full cycle. I haven't even got one under, carried to closing. So the way I kind of look at it is, what other than investing in someone with a fund or saving up all your money and doing it yourself, like how else can you gain access to investing in commercial, for me, multifamily, but there's syndications in industrial, retail, all that, just commercial real estate in general. Like, how do you intend to gain access to that? Especially if you're not an accredited investor, your access to that is like what, maybe REITs. But even then, you're missing out on a lot of the tax benefits. It's not, it still falls under stringent SEC, just like if you were to buy like a share of Amazon. It's not an apples to apples comparison. So, I mean, yeah, I've gotten some of those comments. It's kind of one of those, oh, you're looking just for fees. Well, it's like, all right, well, you go get the deal and find people to do it. Like, I think fees are not bad when they're done correctly and transparently and they're modest. But I have seen some just in other. I like to see other people's models and stuff. It's just kind of like, man, like that much is what you're asking, and you have all these other like. It's like you have your acquisition fee, your capital event fee, your refi fee, your management fee. It's just like you really start. It sounds like it's not like sometimes people are trying to like nickel and dime for fees, but it's like no, just you have your acquisition fee. You found the deal, you brought it to them. Then if you're going to asset manage it, sure, a small asset management, but like that's two. And if someone really pushes back on like just two fees that I think are warranted because you're doing everything for the deal, they're just giving you the money to run it. Um, I think people are more than welcome to find other means to invest their money. But I can't find another way other than syndications or funds to gain access to those kind of assets and really take advantage of the tax benefits those can provide. You can invest in commercial real estate, as equities and stuff, but like I said, that's not the same. So, I mean, unless people can find a different way to gain access to it, those are really kind of what people are left with at the end of the day. And they both have their pros and cons. They both have bad people who bring bad reputations to an otherwise, workable system. Um, I also just think there's not enough of the people who do it well and do it ethically out being vocal about doing it the correct way. It's always, the squeaky wheel.
Right. I think that's fair. And we've had we got a gentleman, Jesse Sells, who's been on the podcast as well. And his whole thing was he ended up founding kind of a social concept where he was investing in almost, I don't call it a halfway house, it's not the right term, but basically in and around prisons where people were coming out of prison. He was putting all the resources, all that, where his returns weren't as great, but yet he's got a reputation for truly stepping out and doing something for the community where his investors like, if I'm not making, 75 basis points on this one, but I'm doing a positive for the community, I'm okay with having a, less than a percent, worse return, but doing positive and all that. And I think that's when you find that thesis that people can really come in, I think raising the capital becomes a whole lot easier at that point, does it not?
Yeah, putting a little, social responsibility behind it. Like, I don't know if you've talked to Mike Ely. I'm not in his mastermind, but he's very active on LinkedIn, and he's from the Cincinnati area. He does a lot with like Section 8. I knew, one of my professors, he does a lot where if churches are going, not doing well financially, he'll go and like as like a consultant, and a lot of these churches are on like acres of land, and so they'll help them like, hey, if you add like a 20 unit apartment building and rent it out, however the church wants to go about finding tenants, either through their parish or just a regular property manager. They already own the land, so he helps them like do the finance and set up to have these things built on the church's land that can give support to the church and help them generate revenue to keep the church going. There's a lot of ways to do that, and then even if without kind of doing it passively, there's like opportunity zones where like the government says, hey, we really like for this area to kind of turn around, we think it's there, but we need like additional investments, here's some incentive. Even that's kind of you could say you're doing a greater good while you're getting really good tax benefits if everything goes well.
So I'm curious, why did you choose multifamily? And I'll preference for the fact that I don't like multifamily. Don't want to touch it. Don't want to do it. It's not in my wheelhouse. But yet, so many folks just love multifamily. What drew you to multifamily versus office or retail or industrial?
So when I first like started really looking, like I got out of the army in like some August 2020, like right in the
The middle
bee's
of it.
nest of COVID.
Yeah.
And so like at that time, as you can probably remember, like office and retail was like it wasn't looking very good. And even like the recovery like was very slow. I've nothing against it. We did a lot of projects with it. I think there's money to be made in it in the right areas, obviously done correctly, which I think applies to everything. But for me, it was just for one, apartments, houses, it's on the human, hierarchy of needs that people need a place to live. And so, that played into it. And then I kind of looked at, I wanted to invest where I live, or generally speaking. So right now it's like Southwest Ohio, Dayton, Cincinnati, that kind of 75 corridor. And, a lot of the people I knew and talked to, they were into like the mobile home parks, which Ohio, there's not that many, not enough to be something to chase, long term. Um, if anything, it'd be more of kind of like the flavor of the month, maybe one or two. Then it's like, well, you're outside of your market anyway. The RV parks, like no one comes to Ohio to RV. I don't think there's even one in the state. Which they have. I really like the model. I think there's a lot of money to be made there, especially in like Sunbelt states. But like where I am, people don't come to vacation in Ohio. at least not for to RV and stuff like that. They want to go where there's sunshine. They want to go where there's, not far from big things. Um, and so that really left me with multifamily and industrial. And, I still like small bay industrial. I think there's a lot, especially with logistics are really blowing up in central and southwest Ohio. Um, DHL's main international hub is Columbus. Amazon just built their international hub in Cincinnati. Um, there's a lot of infrastructure popping up around, and I think small bay storage is a good one to go. It's just I kind of really dug into my underwriting with multifamily. That's kind of where I networked. Those are the brokers I've met with. Um, and it doesn't ever really seem to go away. And the way you see some markets will ebb and flow with the other asset classes. And it's just kind of one of those, I kind of just stuck with it. And there's plenty of, there's a lot of them, like apartment buildings under 100 units, in Dayton and Cincinnati. So I just felt that, the availability in the market I want to be involved in, that was my best choice.
Okay. And you keep coming back to something I think is interesting as well, is that you keep talking about your marketplace being there in Ohio, being in kind of that 75 quarter. You've brought that up 5, 6 times now, that is your market area. And I'm not making fun, right? You are hyper focused in these markets where if you listen to some of the gurus, hey, find where, Florida's amazing. Everybody go and invest in Florida. But you're saying I am staying in the 75 corridor in Ohio. Why? Why be as hyper focused in a market versus chasing the Sun Belt states, chasing what market is the flavor of the month, as you kind of put it? Why stay so locally focused?
One of the main ones is, very elementary, so I can reach out and touch it. Um, I can go drive 10 minutes down the road. At max, I drive an hour. Especially if it's like downtown Cincinnati. But that's an hour drive for me. And I'm pretty. I like to go out and see what's going on. I like to when you go, you can see something on Google Earth. You can go to Google Streets and get on this corner is this, but it's like you can't you can't Google search what it feels like to be in that neighborhood. When you go somewhere, there's that feel of like, yeah, I should probably just get in my car and go home. Or
Sure.
like, oh man, this looks like a lot nicer than it's on. They got kids walking and playing in the streets. Their families are going on walks on the sidewalks. Kids are riding bikes. So it's like this is where I would feel comfortable living here. So it's kind of like you can't replicate that by looking online. I mean, if you have someone say like I want to invest in Charlotte, and you live in Charlotte and you're my partner, you can go do that. Then yeah, I would that would make sense. But I like being able to go out and touch it. And I think Ohio has a lot going for it. It has some of the lowest housing costs and cost of living in the country. We're one of the faster growing states. We have top 10 GDP as far as Ohio in general. I think a lot of businesses are coming. There's a lot of infrastructure investment coming to Ohio. We have a chip plant going up in Columbus. There's an electric EG or EV battery plant going up near Dayton. So there's a lot of things coming in. And right now in Ohio, especially Southwest Ohio, it's like for every 4 or 5 families coming in, there's only one available house or one available, like unit for a family. So I mean, the demand's there. There's a housing, there's a slight shortage, which is good for when you have it, bad if you want it. Um, but I just think there's a lot of good things. Looking at the demographics of the area. I'm like I said, I have like an analyst itch I like to scratch. So like I really dig into like what's going to keep it going, and a lot of job creation, a lot of medium income growth in those households, and more people are coming in every day. And I just think I think Ohio is one of those, like, people call them like flyover states. There's not that much here people come to see, but um, I think niching down into something is probably the smartest move anyone can make in any industry, especially something like real estate, like niching in, whether it's niching into the market, niching into the asset, niching into capital, access to capital. Just find something to kind of really dig into. Because I know a lot of people talk about diversify. Like diversify is good when you have a lot and you don't want to lose it. But when you don't have much, you're trying to gain. Like the best way to do it is become as hyper focused into something as you can, and that's kind of what led me to like I just want to be here. I can reach out, touch it. Ohio has a lot of good things going for it as a state, community, and all of that. And like you said, if everyone's chasing, all the gurus are saying Sun Belt, Sun Belt, Sun Belt, where's everyone going to go looking? It's uh, if that pond has a lot of hooks in it, I'm going to go to the one that doesn't. And I'm still fishing.
Yeah, no, and I think it makes sense. And I will say, from not from Ohio, um, there's a lot of things that are starting to look attractive where we're starting to see clients go, maybe I should be in Ohio. Maybe I should be looking this way. Maybe I need to start looking at the Rust Belt states more so than what they were. And I think that's a positive. I think some of it is just Ohio and what they're doing marketing wise when it comes to economic development and those kind of things there. But I like what you dove into as you started talking about the market characteristics and the demand of the market from an investor standpoint. I will say, from working with investors for 15 plus years now, many are like, what is the cash flow? Okay, good, that's great, and that's all they look at. But yet you're looking at, hey, here's what our demand is. Here's, for every, I think you said, for every 4 families there's only one home, or 5 families there's one home. I forget exactly how you worded it, but there's something along those to where there's not enough housing inventory to, for the people that are moving in here. It means prices are going to rise. It means there's room for development. You're looking at all these fundamentals that are coming in. Where did you pick that up? Because I think that's what a lot of investors truly miss, is the fundamentals of understanding market analysis.
Um, it's just, I guess I don't really know how to explain how I thought of that to look into that. I just kind of like, what are the main drivers of people? Because this is in every facet, this is a people business. You have to meet people who have what you have or selling what you want. You have to meet people who are providing a service you're looking for. You have to meet people and bring people in to, be occupants in your building. So, like, if people is the business, where are people going? How long are they staying? And are they happy there? Um, I think it really is like, are the people happy, and are there more people coming than going? And is money being made? Is, because you got to pay for it. There's got to be people to pay, and there's got to be something for them to pay for. So it's just like, if you have all those things and they're all going up, like, not to say underwriting should be, done with, a fine tooth comb, but like, you don't have to worry about a lot of like the ebb and flow of like rent retraction, rent growth, retraction, growth. It's like, I'll take that chugga 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 chugga, that slow, never goes down but doesn't skyrocket. And that's kind of where I think, I'm partial to Ohio, but I know Indiana does really well. Kentucky has its places. PA's got its markets. So I think, like you said, the Rust Belt Midwest, there's a lot going on that, if you know what to look for, it's there. But if you're just kind of following the trend, like, you're not, it's not going to be here.
I can see that. So, how do you feel your time in service has either helped or hindered your ability to move into this new realm, kind of post military service?
Yeah, it's definitely done both. I guess I'll start with the help. The help is, the being able to kind of take something on the chin and just be like, all right, let's go again. Oh man, all right, let's go again. All right, let's go. So it's just kind of being able to. I love one of my favorite phrases from the military that I always say: just embrace the suck.
Right. Yeah.
Because once you accept it's going to be uncomfortable, or it's going to be rough, or it's not going to be ideal, like, you don't have to worry about it anymore. You've already accepted it, so it's like it doesn't have to dwell on you anymore. So it's kind of just, you're going to go on a ruck. The ruck is heavy. Stop complaining that the ruck's heavy while you're rucking it. It's like, just go and do it.
Yeah.
And so I think that's kind of helped. Well, not kind of. That's helped a lot, just because, like I said, I've gone a long time and haven't had, on paper any successes, but my underwriting's tightened. I think I understand what I'm looking for better. My ability to identify risks or red flags has, gotten sharper. So it's like, I'm not, I guess you could call it failing forward in a way. I haven't like had a paper win, but it's like I'm honing and honing and honing to where it's like eventually it's like that tree's just gonna fall and I'm like, heck yeah. But on the other side, we're kind of one of those like hurry up and wait. So it's like, I try to rush these things and not rush, but like I'm on a roll, and people aren't on my pace, or um like communication goes dark, and it's just like, man, like I don't like this. Like, we were talking, and now there's nothing, and it's just like those kind of things where like in the military, like those issues don't happen. If not, they're solved very quickly, because when someone like communications gone and stuff like that, people get really upset because they're not being nothing's being passed up or down what should be. So it's kind of one of those, like they haven't had been in the environments we have, that it's kind of like I need to sit back and kind of look at the board. I'm like, all right, they haven't they're not they haven't educated themselves or been trained in the same ways we have or I have. Like, I can't expect them to do the same things that I do in the same way. And so it's like I just have to kind of like, let's see if we can go a different way about this. So everybody's happy. Worst things you can do is just, kind of harp on someone and then just like burn a bridge that did not need to be burned, just because you didn't like that they didn't communicate. It's like, that's fine. You don't have to maintain a relationship with them, but like, don't go out of your way to make someone mad or to, say something disparaging just to feel like, you're mad at them.
No, that's fair.
And that's just kind of the main thing. And it's just kind of like that soldier mentality, that go, 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 wait, go, 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 go. It doesn't matter what's in front of you. You got your helmet on, just run into it. If it doesn't move, run into it harder. If it doesn't move, see if you can go around it.
Yeah. That's exactly how I talk about it. We're a big hammer, big smash kind of crowd. If it doesn't smash the first time, get a bigger hammer. Yeah,
Right.
yeah, it's exactly
And
how we do
so
it.
just kind of having to wrangle myself in, because that's just a personal thing I have to deal with, because that's my internal things. I gotta, like, hey, we gotta slow down. Not everyone's on this pace. I'm not their number one priority, nor are they mine. So it's like I need to make they have 1,000 other things going on like me. I'm just hyper focused on this one. So it's like, all right, we're fine. My kids are coming home. My wife, is still as beautiful as ever. So everything's still good with the world. I just need to relax.
Yeah, no, that's fair. So, looking back at it now, you're 4 or 5 years, post military service, knowing, going into this path. What do you think you would have done different in your transition to prepare yourself better to be where you are today?
To be honest, just have a plan. Because like when I was getting out, you always hear kind of people say like, "Oh, I was so lost. I didn't know this, what to do." I'm like, I felt that way. Like I was like, man, like here in my head, like I was gonna finish this course I was on. I was gonna be able to pivot, and I was gonna, ride out to the sunset in retirement. The military, and then it's like, well, that's not on the board anymore. So you have a year to figure it out, and then see ya. So it's like, oh, like because in my mind it's like I didn't want to go just turn around and go government contractor or GS job, just because like I was done with that pecking order. You know, I love, what's the famous thing? I miss the clowns, not the circus. Um, so it's like I didn't want to immediately just go right back to the same environment I just left. Like I was done with it. I had my time. It was good while it lasted. It was time for me to do something new. But I didn't know what that was. Like I still kind of had the real estate, that was just kind of like an interest at the time, because I didn't even really go into that right out of the military. And it's just having a plan, and I guess always just kind of be thinking about, man, if I were to get out tomorrow, what would I want to go do? Like just kind of have that in the back of your head, because you never know. One wrong trip, one wrong turn, and everything can change. Because I also be aware of what's available to you in your out processing journey. They have a lot of those. I don't know what the program's called. They're, depending on where you are and what unit you're in, they're different. But they kind of have like those. They help you like write your resume and what to do to apply for a job. It's like, yeah, that's nice, but it's like, where you're in, like what career are you going to apply that to? And so it's like I didn't really have a goal. I was intelligence, but like you can only do intelligence for the government. No, businesses aren't hiring, a lot of intelligence people to do business intelligence. Like there may be a couple, and it's very niche, but it's like a signals intelligence with a language is not going to go do corporate, espionage or something like that.
Right, right.
Um, and so just kind of having a plan. There's a lot of great things. Skillcraft not Skill Craft. They're the ones that make the pins.
Yeah, Skill Bridge.
Um, Skill Bridge. Thank you.
Yeah, yeah.
um, that's a pretty good program if it's still called that. They're always people are always changing names of programs, but they generally kind of perform the same functions. There's also Cool, which I probably wish I would have done in hindsight, taken advantage of. That's more of like the certificates, kind of like the trades and equivalent type careers. Because I really like real estate, but I think there's a lot of good people who get out, go do HVAC for a couple years and start it and buy or start an HVAC company, and then you can invest in real estate, with your earnings from that, kind of fund your own real estate investments. And I think, that real military people do that really well because, if you bought into the, being in the military, you let it teach you, discipline, how to backwards plan. Getting out, like, that kind of like stumped me. Like, people don't know what that is. Like, when you want something done, where you are now, you have that amount of space to finish everything else you needed to do to get it done. And then it's just like, when I say that to some people, like, oh, that's a really good way of looking at it. I'm like, well, how have you been doing it this whole time?
Right. Yeah, yeah.
And so I think, just kind of own it and know generally what you would want to go into if something were to change completely tomorrow. I think would be the best advice, because nothing's worse than kind of having the rug yanked out of you, and kind of like, I always like saying, you ever watch, or what the rudis is, the wooden sword that gladiators earn when they get their freedom?
Yeah, yeah.
I would say it kind of like, it was like getting that, because it's like, man, this whole skill set I've been developing and implementing, it's like, can't really go do that anymore. Like, it's the people that I was around I'm not around anymore. This new group I'm kind of have to go and live with is a lot different. So it's like, it's kind of like, well, what do I do now? So it's kind of just own it, find something that you think you would want to do, and either backwards plan it to where you can get to that goal in 10 years, or just at least have an idea of what you want to get in when you get into when you get out. Because the worst thing in the world is just kind of floundering about trying to looking for a new mission when there's nothing, you don't have any traction anywhere. And I think that's, I think a lot of that really gets on a lot of people, and you see a lot of vets when they get out kind of just feel lost and alone because they don't know what to do. It's a very tribal community, whether you want to buy into it or not. It's what it is. Your unit, the only people you see every day are your unit, and you guys have to look out for each other, sunny skies or rain, because, and depending on what your job is, that who's going to boil down to. And then to not have that system anymore when you get out, everyone's kind of like dog eat dog. Everyone's, kind of looking out for themselves. Like, it's a real culture shock. And so it's just kind of, it can really wear on you mentally if you're not, at least prepared for the one aspect is like, all right, I can really just focus in on my work and then slowly adapt to kind of back to normal society.
Yeah. No, I think you're spot on that we've heard other guests say the same thing, is that you're going to be out of the military at some point in time. You might as well start planning while you're in. And I 100% agree with that. And I'll absolutely echo the fact of the camaraderie is different. Where I remember we've got some buddies that we do a hunting trip roughly every year, all Army buddies. We all serve together. Some of us overlap. We all knew each other, maybe not exactly the same unit at the same time, but we all kind of knew one another. And the last trip that I went on that I was able to make, all of a sudden this guy, super tall, stands out. I'm looking at him like, I don't know. Oh my God, that's Sam. And realized that the last time I saw Sam, he was getting on a plane, heading back to the U.S. from Iraq. I had not seen him in 10 years. And it was just instant like, dude, what's up? Hey, how's it? We're both ugly and fat, but man, how's life? Like, what's going on? Like, nothing changed in the fact that we both had, 10, 12 years worth of a civilian career already at that point. But the camaraderie was right there. We sat down in a blind, for one evening. And other than the fact, we had kids and all that, we're generally the same people. It was fascinating to how that camaraderie is different, where I haven't had that anywhere else in the civilian side. So I think you're spot on.
I'll say I was at a guy I worked with in Afghanistan when I was deployed, and I think it was like 6 years later. We were still in Fayetteville, and we were at like just like a festival, and he was running. I guess he bought and was running a snow cone stand. So I walk up, we kind of look at each other, kind of look around, and this kind of like that. You? Is it you? And you're like, whoa! It's like just one of those like freak accidents. Just haven't seen each other in like 7 years, and we run into each other at a street fair. Yeah, like you said, you immediately revert right back to like the last time you guys hung out.
Yeah. So, yeah, well, David, thank you so much for your time on this. Well, thank you so much for sharing, your journey, your story, and kind of what you've seen as well. For those that are watching, if you guys have questions, feel free to throw those in the chat. We'll definitely make sure we tag David in those so he can jump in and answer those as well. And of course, if you found any value to this show, feel free to give it a like, a share it to somebody who may be going through the same journey that, David's story absolutely resonates with them or could resonate with them, so they can transition and maybe not make some of the same mistakes that many of us who are a few years further down the path have made. So, David, again, thank you so much for sharing your time with us and sharing your story.
Hey, no problem, Will. Thanks for having me.
Yeah.